Hey guys, today I want to talk about a stock that I think represents one of the best values a dividend growth investor can get right now. I've already done a full in-depth analysis of this one, but the stock has taken a bit of a dip since I've last made a video on it and is currently down about 7% off where it was trading at the time. I am of course talking about Altria, ticker symbol MO. In this video, I want to focus more on the current valuation of the stock and why it is trading so cheaply. If you're looking for an analysis of the fundamentals and business model, check out my previous analysis, which I will link in the description. So Altria is currently trading around $40, and just a few weeks ago the price dipped as low as $38. At current prices, it is trading at a forward P of 9.5 for this year and less than 9 for 2021. The current yield is above 8.5%. This is a company with over 50 years of consecutive dividend increases that is yielding almost 9%, which is an incredibly rare thing to find. If they maintain their historical dividend growth rates, you could be yielding 20% on cost in 10 years. If you know anything about dividend growth investing, you know that a yield on cost that high is extremely difficult to achieve, especially over only a single decade. This type of opportunity is exciting to consider, but I'm not banking on it. Dividend growth has decelerated for Altria over the last 2 years. Their most recent increase this year was just 2.4%, and the previous year was 5%. I am anticipating continued low to mid-single-digit dividend growth over the next several years, with the potential for increased growth eventually fueled by emerging alternative nicotine products. I think this level of growth would be prudent for management, especially given the current shaky environment, both economically and politically. Management has maintained a long-standing dividend target of 80% of adjusted earnings per share, so ultimately long-term dividend growth will be determined by earnings growth. Currently, the dividend is quite safe and well covered by cash flows, but I believe earnings growth will begin to slow, so we should expect a lower dividend growth rate. Historically, this company has maintained its earnings growth primarily through price increases in its products. Recently, their flagship brand Marlboro has started to slip in market share, and I think ultimately Altria will have to become more competitive on the pricing front. This will be a very slow and gradual process, and Altria definitely still has many years of dominance ahead of it. They currently control a massive portion of the US market, about 50%. But I think their pricing power will eventually start to diminish, especially if things take a turn for the worse economically and consumers start to look for more ways to save money. All this being said, given the current yield of 9%, I think the stock is a buy even if they continue to grow the dividend by only 2.4% per year, which I don't foresee. Now, for some context as to the current stock price. Right now, Altria is in a multi-year downtrend after peaking in June of 2017 at an all-time high of almost $78. It's down almost 50% from its all-time high and is sitting right now in the middle of its 52-week range. This prolonged downtrend has wiped out the previous 3 years of gains, leaving the stock trading at levels last seen in 2014. Now, to give you an idea of how crazy this valuation is, in 2014 the dividend was $1.92. Using the current share price, that would give you a current yield of around 4.7%. So the yield has nearly doubled over the last 6 years. Altria's adjusted diluted EPS for 2014 was $2.57. Today, analysts expect EPS for 2020 of $4.31, which would be a 68% increase over 2014. Revenue, on the other hand, has been essentially flat in the $24 to $25 billion range. It is worth pointing out again that they are maintaining this revenue level almost entirely through price increases in their products, which offsets the lost sales from the continuing decline in cigarette consumption rates. But this has been the story for the tobacco industry for decades. Cigarette volume declines are nothing new and simply a continuation of an ongoing trend. Altria's core business remains strong despite this. If we look at the charts of cigarette volume declines in the US, we can see that it has been very steady over the last few decades. The rate of decline has not accelerated significantly over the past 6 years, so this story alone does not explain why Altria's stock is down so much, though it is often pointed at as the reason why investors don't want to get involved with it. So given these facts, the quite impressive growth in earnings and the dividend, as well as the very steady maintenance of revenues over the last decade, why is the stock trading at the same price it was 6 years ago? I believe there are two primary reasons for the poor performance of Altria's shares over the last 3 years, and I'm not talking about the risks traditionally associated with the industry, namely cigarette volume declines and regulation. No, I think the stock is down mainly due to a cyclical shift in market sentiment, as well as several questionable investment decisions from Altria's management. This multi-year downtrend has actually been pretty broad-based across tobacco stocks. If we take a look at some other tobacco stocks, we can see that they all pretty much peaked at around the same time in 2017, with Imperial Brands experiencing the worst losses and Philip Morris performing the best, relatively speaking. If we take a look at some alcohol stocks, we start to see a very interesting pattern. It seems the majority of the sin stock category peaked between 2016 and 2018 and have been in decline ever since. It seems to me that sin stocks have fallen out of favor with the market over the last 4 years. This tends to happen in the stock market. From time to time, certain segments of the market get really hot and everyone invests in them. And conversely, other segments are ignored and become undervalued. I believe that this dynamic will shift at some point and sin stocks will come back into favor. But putting aside the broad-based industry decline, Altria specifically has had some interesting events that took place over the last several years and in 2016 to 2017, particularly related to mergers and acquisitions. If we take a look at Altria's historical PE chart, we can see something very interesting. The stock price peaked in late 2016, early 2017, and at the same time, GAAP EPS suddenly took a huge jump up, and it has steadily declined ever since. Obviously, something happened in 2016 to cause this. In 2016, one of Altria's largest investments, SAB Miller, merged with alcohol giant Anheuser Busch, and Altria boosted their stake in the new combined company to 10.1%. This combination resulted in a large gain being realized on their investment, which is why earnings were so high for that year. As we can see from their 2016 earnings report, the realized gain here was significantly larger than the total operating income for the entire year. Altria's stake in this company would go on over the next several years to contribute to declining EPS, as Anheuser-Busch has also entered a multi-year downtrend, so the value of the equity stake has continued to decline. Declines in equity investments are accounted for as a loss in earnings. This has been offset somewhat by the dividends they receive, but the dividends have actually been declining, while Altria's loss on equity investments has been accelerating. In 2018, Altria invested in another company. This one has been much more controversial and has had a much larger impact on earnings. That company is, of course, JUUL Labs, of which Altria purchased a 35% stake in December of 2018. The timing on this investment was honestly just pretty unlucky. JUUL had been exploding in popularity, and right after Altria invested in them, they started to become a huge target for the media and politicians. I've given my thoughts on this whole controversy before, but to summarize, I view this as primarily a short to medium-term issue. I think vaping is clearly safer than smoking, and safer than heated tobacco as well, and is a more familiar experience for smokers when compared with other alternative products like oral nicotine pouches. In time, I think this will become a generally accepted fact as more research comes out and new regulations are introduced. Altria took multiple multi-billion-dollar non-cash impairment charges against the value of their investment in JUUL, which is why GAAP EPS has gone negative over the last year for Altria. I still see potential in this investment long term, but really it depends on how things go with regulators. But still, in my opinion, even if you completely write off Altria's JUUL investment, the company is still undervalued. Right around the same time, Altria also made another much smaller investment in a Canadian cannabis company called Cronos. Unfortunately, the timing on this investment was also pretty poor, as Cronos' share price has declined around 50% since then. These losses have also impacted GAAP earnings, but much like the losses from JUUL and Anheuser-Busch, they very importantly do not impact cash flows, meaning the dividend is still safe. In my opinion, Altria actually has the right idea in trying to diversify their business, and I believe the cannabis and vaping industries have very bright futures ahead of them. But they overpaid for their stakes and pretty much purchased at the worst possible time. Still, these mistakes are not enough to warrant such a huge discount in share price. So in summary, I believe Altria is trading at a significantly discounted price and represents a great long-term buying opportunity. The core tobacco business remains strong and steady as ever, despite ongoing fear-mongering about the death of the industry. This stock is certainly not without risk, and they probably overpaid for their investment stakes in JUUL and Cronos. But I think the risk is priced in at these levels, and I think that the most probable outcome 10 years from now will be a higher share price, a higher dividend, and a steadily growing bottom line. I personally have been adding to my position under $40, but I'm not going too heavy, as this is already one of the biggest positions in my portfolio. I want to thank you guys for watching the video today. Let me know your thoughts on Altria, and if you have any other stocks you'd like me to cover, feel free to let me know in the comments below. I'll see you guys in the next one.